بسم الله الرحمن الرحيم، والصلاة والسلام على سيدنا محمد وعلى آله وصحبه والتابعين لهم بإحسان إلى يوم الدين. أما بعد، أبنائي وبناتي طلاب الفرقة الثالثة شعبة اللغة الإنجليزية كلية التجارة جامعة كفر الشيخ، أهلا بكم. اليوم محاضرة يوم الخميس 2 أبريل 2020. في هذه المحاضرة سوف نتعرض بشيء من التفصيل لبعض بنود المصروفات والتكاليف واجبة الخصم من الإيرادات السابق الحديث عنها في المحاضرة الماضية. المحاضرة اللي فاتت اتكلمنا عن بنود يجب من المصروفات والتكاليف يجب طرحها من الإيرادات للوصول إلى وعاء الضريبة أو التاكس بيز، وقلنا البنود دي بشكل إجمالي. النهاردة هنفوت على بعض هذه البنود علشان نتكلم عليها بشيء من التفصيل. هذا التفصيل هيخدمني في حاجتين. الحاجة الأولى في حل المسائل العملي اللي هناخدها مع بعض في السكشن، والحاجة التانية إن هذه التفاصيل بتبقى يعني محور اهتمام الأسئلة النظري اللي بتبقى في شكل صح أو خطأ في الامتحان بإذن الله تعالى. فنبتدي على بركة الله ببعض البنود، نشوف شوية تفاصيل كده عنها. اتكلمنا المرة اللي فاتت عن تكاليف اللي هي يعني expenses or cost and expenses are deductible by and mentioned obviously by the tax law. These items include interest on loans and depreciation of the firm assets, firm fixed asset, according to article number 25 of the tax law, fixed asset of any organization has to be divided into 4 categories, 4 groups. The group number 1 include the constructing, developing, renovating and reconstructing any building, establishment, ships, aircrafts for each tax period. Any processes related to developing, constructing any building or renovating, reconstructing any building and establishment during the tax period, this is the first category. This is the first category of fixed asset. How to compute the depreciation of this group? The depreciation of this group has to be calculated using the straight line depreciation method using 5% rate. 5% rate. This means that the useful life of this asset or the cost of this asset has to be allocated equally among 20 years, 20 accounting periods. This is the category number 1 of the fixed asset, and this is the method stipulated by the tax law of the commercial and industrial activities. The second group of fixed assets is the intangible assets. Intangible assets purchased, including goodwill, patents, copyrights, trademarks, trade name, license, franchises, etc. All the intangible assets has to be depreciated using the straight line depreciation method by 10% depreciation rate, which means that any purchased intangible asset has to be allocated, its cost has to be allocated among 10 years. If you use the 10% rate to allocate the cost of the intangible asset, that means that the total amount of the intangible asset will be allocated to 10 years useful life of these intangible asset equals 10 years. That is known by the depreciation rate, using depreciation rate. By the way, the 5% and the 10% of the historical cost, all the amount expended to acquire the fixed asset with a zero salvage value, in these two cases. In cases of buildings and cases of intangible assets, the salvage value equals 0. The third group is depreciated using what we call depreciation base system. This method means that we will use a depreciation rate, but this depreciation rate will apply to what we call depreciation base. What we mean by the depreciation base? Depreciation base is the book value. What we mean by the book value of a fixed asset? Book value equals the historical cost minus accumulated depreciation. Depreciation base of any fixed asset equals the historical cost of this asset minus its accumulated depreciation. Book value or depreciable base has to be used to depreciate the two other categories, over here. The first category is the IT assets. IT assets, for example, the computers, information systems, software, and data storage equipment. These are examples of IT fixed assets. This category has to be depreciated using what we call depreciation-based system by 50% of the depreciation base. You know that depreciation base will be declined from period to the another. Each period the depreciation base will be less than the previous periods, because depreciation base of period number 1 will be the historical cost in full. Depreciation base of the second period will be the historical cost minus the depreciation expense of the first period. Depreciation base for period number 3 will be the book value, which equals the historical cost of that asset minus the accumulated depreciation of the previous periods. The previous periods of the in period 3 equals the depreciation expense of period 1 plus depreciation expense of period 2, and so on. This is the category number 3. IT assets has to be depreciated using 50% of the depreciation base or the book value. All other assets, it is mainly directed to the machinery and equipment. This category includes the machinery and equipment. But if any other assets or fixed assets appears and has to be depreciated, we will use this rule, which is the depreciation using depreciable base by 25% of the depreciation base or the book value. 25% of the book value of the asset each year. This is the way the tax law determine to calculate the depreciation of fixed asset. Note that land, works of arts, monuments, jewelry, and other assets which by nature are not depreciable will not be depreciated. No depreciation shall be calculated for land and works of arts and such and such. So it is depreciation way or method that is imposed by the article number 25 of the tax law. This rule has to be applied to the fixed assets. If the company or the sole enterprise proprietorship use any other way to calculate the depreciation, the tax or the tax agency will recalculate the depreciation expense using these rules according to this article number 25 and make a reconciliation of any differences if it is exist. According to the article number 27, 30% of the cost of the machinery and equipment used in production shall be deducted. This is what we call accelerated depreciation or additional depreciation. It is accelerated depreciation or additional depreciation in the first fiscal period during which these assets are employed. This is an incentive to encourage taxpayer to replace all the machines and equipment This is a good question. Take care. The accelerated depreciation is an incentive to encourage taxpayers to replace all the machines and equipment. So take care about this item. But this accelerated depreciation to be allowed to be applied, two conditions must be met to apply accelerated depreciation. First, machines and equipment are to be used in production, nothing else. It follows that new or used asset acquired for any other purpose other than production, such as furniture, air conditions, will not benefit from this incentive. The condition number two, the company must maintain regular accounting books. The company or the enterprise must maintain regular accounting records or books. This is what I want you to know about the item of the depreciation. Let's go to another item. These examples will be covered by the section, and we'll go to the item number amounts number 5. Amounts deducted annually by the firm from their finances or profits for account of special saving or pension funds or others. These amounts is restricted to 20%. This amount has to be limited to, not exceed 20% of the total salaries and the wages of their employees. Another condition is these amounts has to be invested to the benefit of the employees separated and independently invested for its own accounts. Its own accounts, we mean here by own the employees, to the benefit of the employees account, separated from the company and invested independently, has a separate management system, has a separate and independent funds, and invested to the benefit of the employee accounts, limited to the amount 20% of the total salaries and wages. Insurance premiums taken out by the taxpayer against his disability or death, limited to 3,000 Egyptian pound per annum. The premiums of this insurance system, private insurance system, we mean the private insurance system, this amount has to be limited to, is not more than 3,000 Egyptian pound per annum per year. Total amount has to be limited to 3,000 Egyptian pound. Donations, we talk about donations many times before. Donations could be to governmental units. This amount is deductible regardless its value. Whatever their value is deductible. Deductible means it has to be deducted from the revenues regardless its value, its amount. Type 2, or the donations provided to non-governmental organizations and foundations, but This foundations or organization, non-governmental organization, is subject to the supervision of the governmental ministries or agencies. If it is subject to governmental supervision, this donation to this institutions or organizations is deductible, but these donations is limited to 10% of the taxpayer annual net profit. The upper limit to this amounts equals 10% of the annual net profit. Donations to organization not subject to the supervision of governmental units or to any other poor people in neighborhoods such as hospitals or any associations not subject to the governmental supervision, this donation is not deductible. These donations totally is not deductible according to this tax law. The item number 10, bad debts. We said before that bad debts is a deductible cost, right? But under specific conditions or requirements. To be bad debts to be deducted, it has to meet many requirements, such as the firm keeps proper accounting records. Number one. Number two, the debt is associated with related to the firm business. Number three, the amount of the debt has been previously included in the firm accounts. Number four, the firm has taken serious actions to recover the debt. But failed to collect it after 18 months. Taken serious actions to recover the debt for a period of not less than 18 months, but the company failed to collect it. Serious actions to recover bad debt may include the following actions: obtaining right for payment in cases where this is possible, issue of a judgment by a court of first instance obligating the debtor to pay the amount of the debt, claiming the amount of the debt during the procedures of implementing a court judgment for the debtor's bankruptcy, or concluding conciliatory agreement preventive of bankruptcy. These are part of serious actions that has to be taken by the taxpayer or the company to recover the bad debts. If all of these terms has been met or fulfilled, this amount of bad debt is deductible by the tax law. Note that if this bad debt has been accepted by the tax authority to be deductible, it has to be written off from the accounts or records, accounting records. And if one day part or all of this bad debts has been recovered, this recovery amounts has to be included again in the taxable revenues. We talked about this item before. Another point we want to talk about it is the exceptions from this tax. Some revenues and some profits is exempted from the commercial and industrial activities tax by the law. Article number 31st of the tax law states that some activities are to be exempted from tax on commercial and industrial profits. These activities include profit of land reclamation or cultivation enterprises for 10 years from the date of activity inception. 10 years exemption from the tax for the lands reclaimed or cultivated for the first time. Profits of land reclamation, profits of establishment of poultry farming, bees breeding, cattle breeding and fatting pens and fisheries, fish farming enterprises, fishing boats enterprise profit for a period of 10 years from the date of the activity inception. Number 3, physical person income received from their investment in securities registered with the Egyptian stock market, stock exchange market, Egyptian stock exchange market, any dividends or gains received from investment in securities in companies, its securities outstanding in the Egyptian stock exchange market. These dividends or gains, capital gains or annual dividends, is exempted from the tax according to this tax law. Number 4, physical person proceeds from securities and financial deeds of different types registered by the Egyptian stock exchange market. This is resemble this one. Dividends from shares in joint stock companies and partnership limited by shares. Why? Because companies, corporations, partnerships, before dividing profits, it compute and excludes the tax. So dividends is represent the profit after tax. To avoid the double taxation principle, these dividends has no accepted to be subject to the tax once again. So it is exempted from the tax. Dividends from equity, but dividends we cannot use the term dividends in sole proprietorship. So dividends means that we are talking about either partnership or a corporation, all type of dividends and capital gains of these income is exempted from revenues. Dividend from investment securities issued by investment funds, interest which a physical person receive from their deposit and the saving accounts in banks in Arab Republic of Egypt, in banks and in the social fund for development and the saving deposit certificates issued by banks and deposit and the saving accounts in post office funds. All of these receive or proceeds or interests are exempted. Any profits gained from the funding from the social fund for development is excluded from the tax to the extent of such funding for a period of 5 years from the date of starting the activity or starting production as applicable. This is a good essay question and is a good subject to be made in theoretical questions in terms of true or false, and is very important items that you have to focus on when you solve problems. Now and time is over, and I think that this chapter is totally covered right now, so I'll leave you now and see you next lecture inshallah with chapter number 5. Until this date, I hope you good luck, and assalamu alaikum wa rahmatullahi wa barakatuh.